We have with us Naveen Mathur, who's the Director of Commodities and Currencies at Anand Rathi Share and Stock Brokers, to talk more on that. Naveen, pleasure having you on NDTV Profit. Now, my first question, how are you seeing the rupee downfall, or the lowest level, or the place from where rupee is going to bottom out? Because every day it is touching a new record low.
Thank you very much, Nisha. Pleasure to be there on this show, and thanks for that. I think, yes, what you are saying is absolutely correct. The rupee, somehow or the other, is kind of making new lows, as what we are seeing the new highs in the bullion markets, gold and silver particularly. Now, since we're talking about rupee, the rupee against all the emerging market currencies have been the worst performing currency for this year. We are down at around 6% year to date. Month on month, the last month versus where we stand today is 1.4% down and around 7% week on week. We are currently at around 90.74. This is the lowest the rupee has touched.
That's right. And what is the RBI view, Naveen, on the further rupee fall and the lowest level that they are comfortable with after today's move? All right, we'll reconnect with Naveen, but we have been talking about the downfall of rupee and the constant depreciation and lower record levels. Let's also take stock of the market at this particular all right, so Naveen has rejoined us. Naveen, I was asking you, after the kind of lower move that we have seen on the currency yet again, what is the RBI view coming in on the comfortable levels for rupee? Because 90 being breached was a big enough sentimental drop down for us, and now it is going even lower. What are those comfortable levels that we are really looking at, and when could we see a higher RBI intervention?
So very much valid question, Nisha. The fundamentals which I was trying to say when the call dropped down was, I would say, the persistent FII outflow. So this year till date, we have seen around $18 billion of the FPI outflows in 2025, and particularly in Indian equity markets. There has been a trade deal uncertainty, which we all know. Delays and the lack of clarity with respect to the US-India trade agreement have also led for unwinding of the speculative long rupee positions, which were built on the hopes of the favorable agreement announcement. You have the trade deficit too, which is again expected to be around 30 billion from the last month, which was around 41.68 billion. Again, a wide pressure on the trade balance. As far as the RBI is concerned, Nisha, I think there is a tolerance for a gradual weakness. The policymaker comments which are coming in from the RBI suggest that the comfort with a controlled depreciation, especially as a rupee weaker, supports exports and would help manage the trade deficit. So these are kind of fundamental and RBI concerns. But having said that, fundamentally India remains strong. The inflation numbers are very much on a very sound platform. We don't have concerns with respect to inflation anymore. So I think all said and done, the macro environment, except for the current account deficit or the trade deficit, I would say nothing too much to worry about. The only thing which I think the RBI and the government would be looking forward to as to how to give an impetus to exports, because that would help manage the trade deficit. So I would say the RBI contention might have been low volatility, but a gradual weakness which would therefore help export to kind of, I would say, manage and get a relief on the trade deficit, which is expected to be around $30 billion.
Right.
As far as the levels are concerned, Nisha, I think 89.90 to 91.10, as far as the levels are concerned, would be something to watch out for. But 90 now is kind of understood by the audience in large that the RBI is not intervening, and therefore we are seeing the kind of lows every week.
All right. Thank you so much, Naveen, for joining us with your insights on rupee.